I'm a central banker to one country, you're a central banker to the world in some sense. How do you sleep at night?
The RBI governor quizzes IMF's Christine Lagarde, who believes the taper tantrums could still hit equity markets. Also hints the IMF will frown upon easy money policies if it impacts only the exchange rates.
The US Fed could run out of patience over hiking interest rates. A CNBC survey expects rate hikes to begin from August, which is earlier than expected. Equities slide across the world. Oil prices hit fresh 6-year lows.
There is no doubt in my mind that we are in a longer-term bull market.
There's no dearth of optimism on the Wall Street as the bulls make a comeback. Nifty reconquers 8,700. Sensex rallies almost 300 points. Volatility refuses to go away.
The cabinet approves a new bill to curb black money, approves a bilateral pact between India and the United States to limit tax evasion, also clears 33,000 crore rupees as central sales tax compensation to states for 3 fiscals.
After over 2 years, the mining industry in Goa is up and running. Once again, the Environment Ministry lifts the suspension on 72 of the 89 mining leases.
In this case, we are examining some details. Prima facie, we found that it requires a re-examination.
The Coal Secretary confirms what we first told you, says 8 coal blocks are being re-examined as they received outlier bids. JSPL Stock Tank says fate of 2 of its mines hangs in balance. Company believes the government will respect the auction outcome.
War of words between Sahara and Iraq takes an ugly turn after Sahara accused it of forgery. Iraq plans to snap a $400 million defamation suit. Also seeks to block Sahara from selling its overseas hotels. That's an exclusive.
Startups are on a shopping spree of sorts. Snapdeal buys a small stake in logistics firm Go Javas. Earmarks up to $200 million for 5 to 6 acquisitions this calendar year. Scouts for companies in mobile tech, big data and logistics.
And with the land bill under opposition's fire, Maharashtra Chief Minister Devendra Fadnavis taking no chances in developing a brand new city near the proposed Navi Mumbai airport. A special report from Team Prime Property coming up.
Political मामला
8 महीने पहले बीजेपी ने इसी बिल को पूरा समर्थन दिया था। क्या कारण है कि 8 महीने में सरकार मजबूर हुई इस कानून को बदलने के लिए?
हमेशा बीजेपी पार्टी ही पूंजीपति पार्टी रही है, तो उनको किसानों से क्या मतलब?
The amendment to the land bill is entirely in favor of rural India.
A united opposition flexes its muscles. 14 parties led by Congress President Sonia Gandhi knock on Pranab Mukherjee's doors, all of them opposing the land acquisition bill. Good evening and thanks for joining us in India Business Hour. I'm Nayantara Rai. Good evening, Survi.
Good evening, Nayantara. So much happening and it's all legislative action all around, whether in Parliament or outside. The land bill could be stuck, but it seems there's hope for the coal and the MMDR bill, all that and much more. And of course, a new black money bill that's going to be hitting Parliament.
The government very keen to table that in this session. All of that coming up for you over the next 60 minutes. But let's kick off things with today's trading action. The bulls are back on the Wall Street. Volatility not going away. Market staged a dramatic rally in the last 1 hour in what was yet another roller coaster ride for our equity markets. Nifty surged past 8,700 in early trade, but then only to give up those gains before again rallying in the last few minutes. Ditto story played out for the Sensex, but you know what? All is well that ends well. The index closed for the day up by almost 300 points, going home at 28,736. Mid-caps joining that party. Mid-cap index up by about 1% in trade.
If you have a medium-term perspective, which is like 3 to 5 years, there is still a long way to go for this bull market. However, in the very near term, I think consolidation could be a decent way to describe this market, because we have had such a big rise in individual companies also. So market should digest this rise, and before we go to the next level, I'm sure it has to get supported with the ground reality improving and visibility of a much faster earning growth in the markets, so that we can take the next leg forward.
Well, is the bull market already past its prime? That's the big question that market experts are trying to answer. Market veteran Ramesh Zamani, N. Jaykumar and Ramdev Agrawal had a very special discussion on the sidelines of the Economic Forum for India at LSE and tried to gauge the direction of the Indian bull market. Listen in.
Ramdev, budgets are path-breaking events, whether we like them or not, we know in the markets. But budgets also lead to bull markets being born. Right? So you've been watching this market for 25, 30 years, as I have been. Seen a number of bull markets go through. Each bull market tells us a story about India. What is this bull market telling us?
I have lived 4 bull markets, 85, 92, 2000, 2007. It comes in a 7-8 years time series. So we are overdue for a bull market. And every bull market brings a completely new theme. And funny thing is that you get to know about a theme only after the bull market is over, So, I mean, all these titles, they, of course, some of them are very obvious. Like 2000 was .com boom, was very, very obvious. So this time, the kind of thing which is happening, what I can feel is that it's people have messed up with the .com, they messed up with the leverage. I think this time it's a boom about the quality. And I mean, as Buffett says that, let me know where I'm going to die, I'll not go there. So I think the world wants to go into quality and growth. Basically, they are looking for growth and more particularly assert with quality. So QG is the place where bull run is happening right now, so far. And it could go out of hand. And eventually...
It could, or is it already out of hand in terms of the quality stocks?
That's meta perception, but my sense is it's already out of hand in some of the stocks. So... as the bull run picks up, it will of course be for always they love the growth, but this time it's a quality and growth. It could be like Nifty 50s or 70s in US, or some crazy stuff is going to happen. It's a worldwide.
Jakes, your sense, bull markets tell us a theme. I want your thoughts on that.
I think the biggest and most dangerous trend today is that because the power of information is so aggressive and so immediate, that people are tending to build self-fulfilling trades. So the guy who's bought Bosch, and many of them, will be people from this room, young 25, 27-year-old kids walking in and saying, what's a bear market? I've only seen bull markets, right?
Right.
So,
it's a case of tail wagging the dog.
Well, the derivative is supposed to be derivative of the underlying, and in this case, the derivative actually leads the underlying. So I think a lot of people haven't seen bull markets or bear markets more than 2-3 years, and I think they tend to believe that their last trade of last week is as good, good enough to get them more money, which brings in... So the self-fulfilling prophecy in the world is, to my mind, the most dangerous thing. So we need to be conscious of the fact that quality will be chased. But at the same time, as other investors have told us, sometimes at valuations like this, you need to give up quality at a price. So will you have the same industry where Bosch quotes at 85 times, another auto ancillary in India quotes at 12 times? I think you need to take that call.
So there you go, some of the market veterans in conversation on where the last street is headed. And this is going to be the big trigger for global markets. A recent mixed bag of economic data has sent conflicting signals on when the US Federal Reserve is going to begin raising rates. The Fed's Policy Committee will convene for its monthly 2-day policy meet today, and a statement will be released on Wednesday night. Now, according to CNBC's Fed survey, analysts expect the US Central Bank to remove its patient promise. This will open the door to a discussion about raising interest rates this year. CNBC's Steve Leisman has the details of that survey.
The CNBC Fed survey says pretty definitively the Fed has run out of patience. Take a look at the data. 38 economists, fund managers, and analysts responding to our survey in the month of March. 69% saying the word patience will be removed from the statement. And you can see that's a pretty good change from the prior survey, which was in January, where you needed to get to April to get 50%, and then there was a good chunk down in June. But I think it was that strong jobs report that really changed things around. So let's take a look now at the Fed timeline per our respondents to the survey. As we said, the word patience comes out over here in the month of March. And then you move to when is the first rate hike? It had been September. Now it's seen as August 2015 this year, so a little bit later in the summer, but a little earlier than the prior survey. The balance sheet, it begins to decline in April of 2016. That's the same as it was prior. And then when does the Fed get done hiking rates? It was in the first quarter of 2018. Now it's in the fourth quarter of 2000. These are averages, so moving back and forth between the quarter doesn't matter all that much. The terminal rate, though, the Fed stops hiking this cycle at 3%. So we'll take a quick look at the lines here. The red line is the current line of the trajectory of interest rates. You can see, folks, by December 2016, the Fed is still under 2%, and it gets to a final place, a below normal rate, which is what the Fed is saying to us, at 3%, a touch under and maybe a touch earlier where it was last time. The commentary is all over the place, and I think that's emblematic of this very volatile market. Bob Brusca says the Fed is too worried that the economy will suddenly accelerate when there's no reason to expect it. The Fed has moved into a period of policy irrationality. John Donaldson at Haverford Trust Company writes in, the FOMC is ready to answer the question, does the economy still warrant zero interest rates, with a resounding no. And John Cotter at Ardent Asset Advisors says their desire to normalize and create some dry powder for the next downturn trumps all. They will move in June.
So we know on Wednesday night at the U.S. Fed, if Janet Yellen has lost her patience and we're going to see a hike in interest rates. But ahead of that, the U.S. market certainly nervous. Let's bring up the frontline indices for you so you can see how the frontline indices are doing. You have the Dow down by about 1% or 176 points. S&P 500 also weak, down by about 0.7%. Nasdaq, meanwhile, down by about 15 points. The European markets also in the red. We'll bring up the British FTSE, the French CAC, and the German DAX for you. It's a mixed bag. FTSE up by about 0.3%. The German DAX and the French CAC, meanwhile, nervous ahead of the FOMC meet. Commodity markets now. Let's tell you how crude prices are doing. Brent crude down over 2%. In fact, we've seen crude prices touch a 6-year low right now. Brent at $52.84 a barrel. NYMEX crude barely hanging on to $43 a barrel.
Okay, global markets in the doldrums ahead of that all-important Fed announcement. But staying with that same theme, taper tantrums could still come back to haunt equity markets across the world. That's the word coming in from IMF's Managing Director Christine Lagarde on her India visit. Lagarde made a visit to the RBI headquarters in Mumbai. Governor Raghuram Rajan then held a lively interaction with her. Speaking about unconventional monetary policies like quantitative easing, Lagarde hinted that the IMF will frown upon them if these policies only impact the exchange rate and not help demand recover.
I'm a central banker to one country, you're the central banker to the world in some sense. How do you sleep at night? Well, let me put the question this way. What are the big risks you think face us around the world over the next year? What are the things that we're not fully prepared for? I would ask you unknown unknowns, but by definition we don't know what they are. But what are at least the known unknowns that you worry about?
First one, in terms of both chronology and ability to spread, is the one that we talked about, which is this asynchronous monetary policy, where we see the Fed reverting to traditional monetary policy and the spillover effects that it can have, while at the same time the Bank of England is continuing its process, although at a stabilized pace, and the Bank of Japan and now the European Central Bank are either continuing or entering the sphere of unconventional monetary policy, and that asynchronicity is, as we said, going to have volatility effects. The second risk that I see is that I call the low, high. Low, high is low inflation, low growth, high unemployment, high indebtedness, which affects predominantly the Eurozone area and a few other countries.
You talked about unconventional monetary policy, and I have a small issue that I want to ask you there. What if these policies get extended over time, and what if the primary sort of impact is on exchange rates rather than on domestic demand? would that be a source of concern for the IMF? Would that be something the IMF would start raising questions about? Or is it something that's okay?
These unconventional monetary policies, based on at least the conventional wisdom of those who comment about it or those who implement them, are not policies that are supposed to last forever. They are of a temporary nature. Taking your hypotheticals, which I hope is not to materialize because of the temporary nature of those policies, I think yes, we should be looking at the consequences in terms of exchange of exchange currencies and the effect it has on those. Yeah.
Ma'am, we are celebrating the second anniversary of the taper tantrum in 8 weeks. Do you think it will still disrupt markets, or is it largely discounted as and when the hike happens? So are we really, should we really worry about that as the biggest threat for financial markets? Is it more likely that the threats will be elsewhere in 2015? For instance, could the ongoing spat between Greece and Germany evolve into, once again, exit fears or exit threats at least? Or will the threats to financial markets come from something else altogether, debt default by some commodity countries?
If it is not priced in by markets already, which I would doubt, at least some of it is bound to have been priced in because the President of the Fed has already given signals, and I think there is more uncertainty around when it's going to happen and by how much rather than if it will happen, which to me would say that any normal investor worth his salt would have priced in some of it. But as I said, there will be volatility. I mean, we went through a period of total lack of volatility for very long. Some people got used to it, but the normal way of operating is more volatility than no volatility. Well, more volatility than what we had, than no volatility. As to the other questions you had, it's part of the geopolitical risks that I mentioned, and what happens within a currency zone is a matter of discipline amongst the members, the rules that they apply to each other, that they decide to respect, whether they want to operate transfer or not, whether structural reforms are implemented or not, and this is very largely a matter of political determination by the players themselves. I think yet again, markets are not stupid, and they have priced in certainly a portion of potential risks that could be on the horizon.
That's Christine Lagarde in conversation with the RBI governor on all the challenges she's facing as far as the global economy goes. Let's head back home now. Earlier in the day, we told you how the Modi government is quite keen to table the black money bill in this session of Parliament. The government taking one crucial step towards that. The cabinet, a short while back, has given the green signal and approved the black money bill, the contours of which was discussed by the Finance Minister Arun Jaitley in his budget speech. Let's go across to our correspondents Ritu Parnabhuyan as well as Sapna Das for all of the details. Ritu, coming to you first. This is a government that got this mandate with one of its big promises being as far as black money goes. What exactly has the cabinet approved today?
Heavy penalties proposed in this bill, 10 years as well as 10 years imprisonment as well as 300% tax if anyone conceals income from assets as well as evasion of tax arising out of foreign assets. Moreover, such offences will be non-compoundable. In addition to this, the offenders will not be permitted to approach the Settlement Commission. The fine print also says, according to my sources, that beneficial owner or the beneficiary will have to actually file returns, and any discrepancy in filing of returns will lead to imprisonment of up to 7 years. Last but not the least, the date of opening of foreign accounts, that will have to be mentioned when a beneficiary files the return for income arising out of foreign assets.
All right, Ritu, thanks for that. In fact, let's take the story forward. Sapna has been tracking this as well as to how things will progress from here on. And Sapna, we understand the government is going to try and push this bill through in the current session of Parliament itself?
Absolutely. In fact, there was a clear hint in the finance minister's reply on the general budget discussion today in Lok Sabha, if you were able to kind of get the sense that he was trying to emphasize upon. So basically, the plan here is to bring the bill by 20th March. In fact, what we have heard from government sources is the fact in the next 2 to 3 days. Today is 17th. So latest by 20th, they'll have to put the bill in because after that, there is a summer recess that will ensue. Having said that, one of the very important points of this bill is going to be the compliance window that is being offered to all those people who have so far not declared their foreign income, who want to declare their foreign income. Of course, there will be no relaxation in terms of the penalty provisions and the other aspects of payment of taxes. But the fact is that they will be able to escape or rather avoid rigorous imprisonment. This compliance window, the terms and conditions for this compliance window is going to be very, very important. It might help a lot of people come forward and try and actually follow the law instead of trying to, still continue to elude and evade taxes on income that has been stashed abroad. Having said that, what we do understand is that this compliance window will be open for a couple of months. What we had understood earlier was that, there will be various stages. One is that you come forward and declare your income. Second, you come and, file your returns. You pay the taxes. So the compliance window is going to ensue stage-wise. That's why the term as of now, it's couple of months that is being used. But if I may quote the other government sources which we have been talking to over the last couple of days, the sense we get is that this could actually be there till December 2015. This is what we have heard as of now. The fine print remains in the bill, so we have to wait and watch and see what bill, the bill that is presented in the Parliament, what exactly it speaks on the compliance window. This is going to be a very, very important aspect. Earlier, there was there's a lot of talk about the fact, because the government is offering a compliance window, that means it's an amnesty. It's not an amnesty. Had it been an amnesty, then there would not have been any penalty provision. So there is no let go in terms of the other penal provisions. But the fact remains that there will be no imprisonment if the tax is heavy, so-called tax is heavy, will come into the net now, actually come forward and use this compliance window.
All right, Sapna, thanks for that. Ritu, let me just get back to you on the other important development that we've seen this evening with the cabinet agreeing that India is going to get into that bilateral agreement with the US under the US Foreign Account Tax Compliance Act, or FATCA. Do give us more details on this.
The cabinet basically approved a bilateral pact that will enable the implementation of FATCA, or the Foreign Account Tax Compliance Act. In addition to this, the government has decided to join the Multilateral Competent Authority Agreement on Automatic Exchange of Financial Account Information, or AEOI. Now, this is another way by which the government wants to track assets which are not declared by Indians who are basically beneficiaries from such assets. This agreement will basically enable government to get information about Indians holding assets either directly or through beneficiaries in the United States. Also, many financial institutions which are of Indian origin and are present in US would have had to pay a withholding tax of 30% without this particular agreement. But now that this agreement will be signed between India and US, those companies which are based in US and are of Indian origin and are from the financial sector, they will not have to pay this 30% withholding tax, which as of now they have to pay to the US authorities. With that, it's back to you.
Okay, all right, Ritu, thanks so much for getting us those details. Now let's get some perspective on these developments. We have Dinesh Kanabar of Dhruva Advisors joining in. Mr. Kanabar, good evening. Thanks so much for being with us on India Business Hour. So, as far as black money is concerned, 10 years rigorous imprisonment for concealment of foreign income, 7 years imprisonment if you don't file your returns, and a host of other measures. But is it stringent enough? Is it going to curb the menace of black money?
So this is something which was promised by the government when it came to power. This was something which was mentioned by the finance minister on the floor of the parliament, and the new bill which is now proposed to be placed before the parliament seeks to provide effect to all those provisions that the finance minister laid out. Clearly, it will be interesting to see the provisions as to what is the window provided for people to comply. I would want to believe that it would take a very brave man to keep an account overseas after the provisions have been impacted, because you're looking at a imprisonment of 10 years, you're looking at a 300% penalty, and I don't think very many people would want to do that. So I'm very sure that people will want to really make declarations and come back on this.
Are you expecting substantial disclosures and declarations of income to be made in this window? We don't know the exact duration of the window, but it's clear, as our correspondents tell us, that there will be a window of opportunity provided before the law kicks in.
Yes, so it will really depend on the provisions. As your correspondent was saying, what the government is saying here is that it is not going to really relax the penalties. It's only going to really give immunity from prosecution. So depending on what provisions come about, I would like to believe that with all the disclosures that have happened on HSBC, etc., people will really want to comply with the provisions and see how they can take this window of opportunity. I really don't, I would not be able to speculate as to what are the sums which one would expect to be garnered by the government.
Mr. Kanabar, I have two questions for you. This is Nantara. My first is, we're talking about stringent penalties. You're saying that those defaulters found with black money cannot even go to a settlement commission. What I want to know is, are we perhaps giving too much power to what is already considered to be an aggressive taxman?
So when you talk of an aggressive tax regime is one which, in terms of interpretation of laws.
I said aggressive taxman, not aggressive tax regime. Aggressive taxman.
I appreciate. So there is indeed a concern that is the penalty commensurate with the crime. So as somebody mentioned, are we really saying that if somebody has violated a traffic signal, are we going to hang him? Because that indeed is a crime. It really goes back to whether the government is getting back FERA under the FEMA regime, and there are concerns regarding that. But I don't think there are very many people who at this point of time will sympathize with Indians who have stashed substantial monies overseas. And I don't think there's any sympathy in any quarters for them at this stage.
Mr. Kanabar, we're running out of time, so very quickly, for my final question, there is a theory that there is more black money in India than there is overseas. Are you hoping the government is going to come out with something on that?
In fact, at FICCI, we had come out with a paper which we have presented to the government on what the government can do to really curb the black money menace even in the country. And I do agree with you that that's far, far more substantial than all the horrendous estimates that we have of money stashed overseas. And there are a number of suggestions given, and I heard at least a couple of suggestions being reiterated by the finance minister that he is going to implement them. One will have to wait to see how these are implemented. And I do hope that we do not use just the stick approach. There could even be a carrot approach there.
Yeah, he had said no advance of more than 20,000 rupees against immovable property. Let's wait for that. But thanks a lot, Mr. Kanabar, for taking the time out and joining us here on CNBC TV 18. The other big decision taken by Cabinet was, and this is in a bid to facilitate the goods and services tax, the Cabinet approved 33,000 crore rupees as central sales tax payment to states over a period of 3 years. So plenty of important decisions being taken by Cabinet. We're completely out of time, so we're going to wrap up this edition of India Business Hour. Thanks for watching.
Good night.